Joining us now on the viability of these workarounds is Javier Blas, Bloomberg opinion columnist covering energy and commodities. He's also the author of The World for Sale, Money, Power, and the Traders Who Barter the Earth's Resources. Javier, what's your take on Ed's warning that, the Houthis have yet to activate, and that could hit those other 7 million barrels coming out the other side of the peninsula?
That's a big question mark. It's a big problem if the Houthis were to disrupt shipping for oil through the Red Sea into the high seas. That will be a big problem, because that is one thing that we are going to rely in the next few days to try to debottleneck a bit the Strait of Hormuz. These two pipelines do not resolve not even half of the problem. They resolve a bit of the problem, but certainly buy time for the administration to try to end the war, to try to slow down the increase in prices. But I'm talking about using these pipelines to slow down the price increase, not to stop, and certainly not to reverse those price increases.
That might buy a little bit of time. Javier, what about what the finance ministers, the G7, are discussing right now? The finance minister of Japan saying G7 agreed to respond, including release of oil reserves. The French finance minister saying we are ready to take action to stabilize markets. Just how much can they do, Javier, to stabilize markets?
The key question is going to be the big number, how much the G7 countries of the International Energy Agency countries are willing to release, and whether they are willing to release those barrels. But that will be also a significant element in buying time for the administration to end the war. But at the end of the day, we have lost around 20 million barrels a day of flow through the Strait of Hormuz. That's between crude and products, and nothing else can replace keeping that strait or reopening that strait. Everything else is just patching the system, trying to slow down the train, but we are not stopping it.
Javier, how much damage can be done to energy infrastructure in the Middle East? I mean, clearly, in Iran, you'll see mass destruction as the U.S. and Israel continue their bombing campaigns. But will the Iranians, for example, materially damage Saudi Arabia's energy infrastructure? Can they?
They can, and certainly they are trying. We have had swarm of drones heading towards Saudi oil fields, and certainly those drones have been neutralized, but there is a chance that one single drone goes through. We are talking about flammable products, oil and gas. It doesn't take a lot to create an explosion and to lose a significant chunk of infrastructure. And that is a key risk for the strategy of President Trump. He seems to be saying, look, yes, high oil prices for a while, maybe a day, maybe a few days, maybe a few weeks. But after this is over, then the price goes down, and goes down very, very quickly and sharply. That works only if the infrastructure emerges from the war unscratched. And Iran, I think, is trying to really scratch that infrastructure. And that will be really stop the White House strategy completely.
So what does that mean then, Javier, if we do get damage of Iran's oil infrastructure? And yes, you do have, as you lay out so wisely in your column, the other means of transporting oil through the East-West pipeline. What does this look like long term if there is destruction of energy infrastructure?
Look, worst-case scenarios are terrible. As I said, we have lost already 20 million barrels a day of oil supply or oil flow through the Strait of Hormuz. If we start losing actual production capacity for good, not just because it has been shut down, because they're running out of storage, out of tanking capacity, but because it has been damaged, well, then prices need to go a lot higher than they have gone now. What is the number? I don't really want to put a number, but it is a lot higher than where we are today.